This is Nightly Business Report with Bill Griffith and Sue Herrera.
In a world of lower interest rates, the research seems to show, and I think this is fairly widely accepted, that it's better to act preemptively.
But the Fed chair also suggests that an interest rate cut in July is not a done deal, and stocks fall.
Pharma mega merger AbbVie offers to buy Allergan for $63 billion as big drug makers look for new ways to grow.
Made in Vietnam, multinationals are considering whether to shift production out of China as tensions with the U.S. remain heightened. Those stories and more tonight on Nightly Business Report for Tuesday, June 25th. And good evening, everyone. I'm Contessa Brewer, in tonight for Sue Herrera.
And welcome aboard. Good to have you back. We begin tonight with the Federal Reserve, which has been a driving force, of course, for stocks. The market has been looking for an interest rate cut maybe as early as next month. Any suggestion that one is coming, investors cheer. Any suggestion of something else, stocks falter. And that's what happened today. Fed Chair Jerome Powell said that the Fed is grappling with whether to reduce interest rates. And while he did say there is a case to be made for lowering them preemptively, he also said he did not know how long all of the current economic uncertainties will last. And he warned against monetary policy that responds to short-term political interests. Today, the Dow fell 179 points, just off its lows at 26,548. The Nasdaq was down 120. The S&P 500 slid by 27. Dominic Chu starts us off tonight.
Federal Reserve Chair Jerome Powell speaking at the Council on Foreign Relations, saying the Federal Reserve will act as appropriate to sustain the expansion. He says uncertainty over trade and global growth have increased, but he is grappling over whether these uncertainties will continue. Still, Powell saying the economy has performed reasonably well this year and that the baseline outlook for the Fed remains favorable and that policy should not overreact to any one data point. Powell also hinting at possible insurance rate cuts, pointing to research that shows it's best to act sooner and more forcefully.
I think in a world of lower interest rates, the research seems to show, and I think this is fairly widely accepted, that it's better to act preemptively. As a general matter, I think most central banks would want to act preemptively and not let a downturn gather steam, in a sense. The thought being an ounce of prevention is worth a pound of cure.
Now, this comes after St. Louis Federal Reserve President James Bullard spoke on Bloomberg earlier regarding his dissenting vote in last week's Federal Reserve policy meeting. Bullard saying now seems like a good time for an insurance rate cut, but that a 50 basis point rate cut may be overdone. He says he does see 50 basis points worth of cuts by the end of the year in total. Bullard said he hopes Fed action will straighten out the yield curve as well. For Nightly Business Report, I'm Dominic Chu.
The president has been very vocal about his thoughts on interest rates. Today, he reportedly said, once again, he believes the U.S. dollar is still too strong, and he feels the situation could be eased if the Fed lowered interest rates. The forecast for lower rates, along with growing tensions between Iran and the United States, saw investors piling into safe haven commodities like gold, which today hit a 6-year high.
Speaking of which, when we look at how the various markets have been performing, stocks, they're near all-time highs, which suggests more economic growth. But long-term interest rates are near 3-year lows, which suggests a slowdown. And despite very tepid inflation readings, gold is now at this 6-year high. So what's going on? Scott Nations joins us tonight to talk about all of this. He's president and chief investment officer at Nation Shares. Scott, always good to see you. Thanks for joining us tonight.
Thanks very much, Bill.
What specifically is gold's message right now? Why do you think it's been going up?
I think there are really 3 drivers for gold, not only now, but generally. There are 3 drivers. The first one is interest rates. When interest rates are low, the opportunity cost for owning gold, which doesn't pay interest or dividends, is lower, and so people are able to buy more gold. And we see, as you pointed out, interest rates historically very low. Long-term rates down 0.75 percentage point over the past 6 months. The second driver is the dollar. The dollar's fallen quite a bit over the past month against a currency, against a basket of foreign currencies. And if you're buying gold in another currency and it's denominated in the dollar, then it's cheaper than it used to be. It's easier to buy. Bill, those things are we can quantify. There's a third, and that's geopolitical concern that's tough to quantify. And if you're focused on what's going on between Iran and the United States, and there's plenty of geopolitical concern for people to think is an impetus for buying gold.
So, Scott, if geopolitical concerns are hard to quantify, is it easier to quantify what China's doing? After all, over the past years, it's been a net buyer of gold and helped supported the price, perhaps slowing the decline. Is it behind some of these moves higher?
Almost certainly. China wants to diversify their corporate balance sheet, if you will, and one way to do that is to sell dollars and buy gold. So they're obviously trying to do that. Of course, the undercurrent there is trade tension, the trade war with the United States. So that also makes sense. But there are so many reasons to buy gold right now. There are very few reasons to doubt it, except for maybe the fact it's come so far so fast.
I know you're not a fan of gold right now. So how much higher do you think it goes?
Well, I have thought for the past month or two that all of the planets were aligning and that it made tremendous sense to buy gold as a trade, as a very short-term trade, as a hedge against some of these concerns. I'm not a fan of investing in gold for the long term because not only does it not pay interest or dividends, you actually have to pay to store it and insure it. So it's actually generates a negative return. But in the short term, if you want to hedge against some of these concerns, then I've been a fan of gold, although, again, it's come a long way in a hurry.
All right, Scott Nations with Nations Share. Scott, thank you so much for joining us.
Thanks.
Elsewhere, investors were also given a little more detail on what to expect at the upcoming meeting between the U.S. and China at this week's G20 summit in Japan. An administration official said today that the goal is simply to reopen trade negotiations and that the U.S. will not accept any preconditions to remove tariffs.
A blockbuster biotech deal. AbbVie is buying Botox maker Allergan for $63 billion in a move designed to bolster its pipeline before one of its best-selling drugs loses patent protection. The stocks moved in opposite directions. Allergan shares rose 25%, while AbbVie fell 16%. Meg Terrell has more on the latest merger in the pharmaceutical industry.
AbbVie makes the world's top-selling drug, the rheumatoid arthritis treatment Humira, which draws more than $19 billion in annual sales. But Humira faces competition in the U.S. as early as 2023, and AbbVie needed a way to replace that revenue. Enter Allergan, the maker of Botox, the wrinkle treatment worth $3.5 billion a year. The company also sells drugs for bipolar disorder, gastrointestinal diseases, and women's health, plus more products for cosmetic applications like Latisse and Cool Sculpting. The combination raised eyebrows on Wall Street. Quote, Humira and Cool Sculpting make strange bedfellows, wrote Raymond James, while Piper Jaffray called it, quote, an expensive price for a questionable asset. AbbVie is paying $63 billion in cash and stock for Allergan, a 45% premium to where Allergan shares closed yesterday. That doesn't include more than $20 billion in Allergan's debt.
The premium was a lot to where the stock had been trading, but the stock's underperformed a lot.
And while $63 billion is a lot, it's much less than the $160 billion that Pfizer had agreed to pay for Allergan in 2015, in a deal planned to move Pfizer's tax base to Allergan's Ireland. That deal was scuttled by a change in tax rules. AbbVie's deal for Allergan brings an Irish-domiciled company back to the U.S. But AbbVie shareholders didn't like the deal, and the stock declined. Wells Fargo analyst David Maris said it's not the type of deal that excites investors.
There are really two types of pharma deals, I think, if I had to classify them. One is we're behind in science and we need to buy the newest science that's coming onto the market. And those are a lot of biotech type deals. And then there's the I have something going wrong in a few years and I should fill in this hole or try to augment or diversify away from this problem. And this kind of falls into that.
And he said, as political pressure continues on drug prices, we're likely to see more of these kinds of combinations. For Nightly Business Report, I'm Meg Terrell.
Our nation's federal debt load is on track to hit unprecedented levels. A new report from the Congressional Budget Office says that the government's debt will rise to 144% of our gross domestic product by 2049. It currently stands at 78%. The report also warns that debt levels could reach 219% of GDP if Congress doesn't cut discretionary spending in the budget and if the individual tax cuts from the most recent tax law do not sunset in 2026.
Well, consumer confidence dropped more than expected, reaching its lowest point in nearly 2 years. According to the Conference Board, the decline is due to the escalation in trade and tariff tensions. The report also notes that while the index remains at an overall high level, continued uncertainty could result in further volatility. In theory, higher confidence leads to an increase in spending, which makes up a large portion of economic activity.
The housing industry has been hoping that lower mortgage rates would help drive sales of newly built homes, but that hasn't happened so far. Sales unexpectedly fell for a second straight month in May, and that news pressured shares of home builder stocks in today's trade, and one was especially hit hard. Diane Olick has more.
At a stunning newly built home in Southern California, buyers were pretty scarce. Even the few that did come out for this luxury offering were worried about affordability.
It's nice that the interest rates are going down. I'd just like to be in a better position, going debt-free.
Sales of newly built homes dropped unexpectedly in May, down nearly 4% compared with a year ago. Most expected sales to bounce on that big drop in mortgage rates.
We got some tailwind from the mortgage rate decline, but it was an awfully sluggish start to this year's spring selling season. So we were just clawing back to break even, which is effectively what Lennar reported.
The average on the 30-year fixed mortgage fell from just over 4.25% to well below 4% in May when those sales contracts were signed. The median price of a newly built home also fell close to 3%, likely because fewer luxury homes like this one are selling. What is selling is on the lower end. Precisely why the nation's largest builder by revenue, Lennar, saw unexpectedly bright earnings in the second quarter as it starts to build more entry-level homes and offers more incentives.
We clearly saw traffic and sales continue to strengthen in the second quarter as a combination of lower interest rates together with at least slower price appreciation and in some instances slightly lower prices have positively impacted affordability.
But Lennar's stock dropped sharply during that conference call after its president said tariffs and the labor shortage were increasing their costs. And while builders may want and need to put up cheaper homes given the current housing shortage, doing so given the higher costs hurts their bottom line. For Nightly Business Report, I'm Diana Olick in Washington.
Time to take a look at some of today's upgrades and downgrades. We begin with shares of Tiffany tonight. They were downgraded to hold from buy at Loop Capital. The analyst cited global growth concerns as well as the ongoing tariff dispute, which could cause wealthy customers to delay purchases. Price target $95. That stock fell a fraction to $91.24. Shopify was downgraded to neutral from outperform at Wedbush. The analyst cited the stock's valuation and said that its new network of fulfillment centers is not expected to generate profits until 2023. Price target $305. Shares fell 9% today almost to $284.04.
Grubhub was upgraded to buy from neutral at Citi. The analyst cites data which suggests Grubhub is in early tests with McDonald's, Starbucks, and other large chains. The price target is $91. The stock rose 5% to $75.90. McDonald's and other restaurants were initiated with an outperform rating at Credit Suisse. The analyst cites the company's digital push and modernization efforts. The price target there, $230. McDonald's rose a fraction to $205.71.
Coming up, made in Vietnam.
I'm Carl Quintanilla in Vietnam. With the threat of tariffs on more Chinese goods, Vietnam wants to become the next manufacturing powerhouse. That's tonight on Nightly Business Report.
FedEx topped Wall Street profit estimates but warned that its 2020 results will be hurt by the trade war. The company cites a weakness in global trade and industrial production. FedEx gets about a third of its revenue from outside the United States. It's often viewed as a barometer for global economic health. Shares were volatile in the extended trading session. Frank Holland has more on FedEx's results.
Well, FedEx has had a string of negative headlines recently, but still managed to post a beat on profits and revenues that were in line with estimates. The company says it expects profits to decline next year, however, due to trade uncertainty, global weakness, and also the decision not to renew a customer They didn't name that customer, but it appears to be Amazon. The key takeaway is that FedEx is pivoting to focus more on its ground service, where it says it expects margins to increase. It also expects freight margins to increase. China, where it gets about 2% of revenues and has a major hub in Asia, that remains a question mark after it filed a suit against the Commerce Department, saying the restrictions placed on the shipper as part of the U.S. blacklist on some Chinese companies are unconstitutional. For Nightly Business Report, I'm Frank Holland.
And late last night, FedEx sued the Department of Commerce, saying that it should not be required to enforce federal export bans like the one targeting China's Huawei, and that policing the contents of millions of packages is virtually impossible. You might recall FedEx recently mishandled 2 deliveries for Huawei, which then prompted Beijing to launch an investigation into FedEx.
FedEx is part of the broader transportation sector, which is a key component of the market. Lately, it hasn't been performing that well. Bob Pisani has a closer look from the New York Stock Exchange.
Stocks may be within striking distance of historic highs, but one group left out of this recent rally has been transportation stocks, and that could be a little bit of an issue for the markets. Shipping and freight names, for example, they've had a really rough time this quarter. Truckers like J.B. Hunt, Ryder, logistics companies like FedEx and UPS, they're all down double digits. The Dow transports are still in correction territory overall, down about 12% from their 52-week highs. That's a bit alarming because many investors view the transports as an important barometer of the health of the U.S. economy and even the global economy. So any weakness in the sector could spell more trouble ahead for the broader markets and make it hard for stocks to sustain upward momentum. That's the key premise, in fact, behind Dow theory. But FedEx in particular has already cut its full-year guidance twice since December, citing slowing macro conditions and weaker global trade growth trends. That's very important because they're a barometer of global health. But there's a notable divergence between ground-based transportation and the airlines. The airlines have been doing great this quarter, so names like JetBlue, Alaska Air, Delta, they're all up about 10% or so in the second quarter. Airlines have been gaining back pricing power. They've been able to reduce capacity, and that's a key issue that's been plaguing the industry for the past several years. For Nightly Business Report, I'm Bob Pisani at the New York Stock Exchange.
Micron Technology reported better than expected profit and revenue tonight and said that it sees early signs of improving demand. That was very welcome news for investors since Micron is one of those companies caught in the middle of the U.S.-China trade war since it does a lot of business with that country. Josh Lipton joins us tonight from San Francisco. What was the one key takeaway from that important report, Josh?
Yeah, so that was interesting, Bill, because, heading into that earnings report, that stock had really taken it on the chin. It was down more than 20% from its intraday highs back in early April. And a big reason there, you mentioned it, was Huawei, or specifically the fallout from the Trump administration's decision to blacklist that Chinese tech giant because it's an important Micron customer, makes about 13% of revenue. What executives on the Micron call said, though, was, listen, they reviewed that export ban and they determined they could lawfully resume shipping at least some subset of their current products to Huawei. I checked in with RBC's Mitch Steves. He covers the name, and he said, listen, that was a relief to investors. It means that business at least didn't go completely to zero. Also, more broadly, executives said they are seeing, in their words, at least some early signs of demand improvement added up, and you can see that stock moving sharply higher right now in the after hours, Bill.
All right. Josh Lipton in San Francisco for us tonight. Thanks, Josh. Well, there might be a fox guarding the hen house, and that's where we begin tonight's market focus with Bloomberg saying the Justice Department is looking into claims of potential price fixing of poultry at both Tyson and Pilgrim's Pride. Pilgrim's Pride told CNBC it strongly denies those allegations, while Tyson said the allegations had no merit. Both Tyson and Pilgrim's Pride stock were down about more than 1% today. Berkshire Hathaway CEO Warren Buffett says despite reports there have been no conflicts with 3G Capital, which is Berkshire's ownership partner of Kraft Heinz. The report said that there were tensions, the result of the chronic underperformance and accounting problems at the giant food producer. Berkshire and Kraft were both up a fraction in today's trade.
Bausch Health said it will pay down an additional $100 million worth of debt, clearing its mandatory payments for the first quarter of 2020. The company also launched a new lotion treatment for plaque psoriasis. Bausch shares rose more than 2.5% to $24.38. Late today, AeroVironment reported quarterly profit below Wall Street expectations. The defense and aerospace company cited a decrease in product sales and weaker gross margins. That stock fell sharply in after-hours trading initially. It finished the regular session off just a fraction to 61.31.
Well, the Made in China label is seemingly everywhere these days, but with the threat of more tariffs on Chinese goods, some multinational companies are now considering moving their manufacturing operations out of that country and into places like Vietnam. Carl Quintanilla reports for us tonight from Hanoi.
This is the story of that Nike pullover or that Adidas tracksuit you might have bought for your kids or grandkids at Walmart or Costco. It's being sewn here today at a factory in Vietnam, just north of Hanoi. Workers earning $280 a month stitch, package, and ship the product to the U.S.
And companies are leaving China.
With President Trump threatening more tariffs against Chinese goods, American brands are asking, what else can we make in Vietnam? The U.S. is importing 40% more from Vietnam than this time last year, while imports from China down 13%. Lin Wynn's company makes clothes for Columbia Sportswear and Abercrombie & Fitch.
Whatever China can do, Vietnam can do the same at cheaper price, at environmental, at human rights, at whatever we can do as a right thing to do for the industry, for the consumer.
It affects your pocketbook. Retailers like Target, Best Buy, and others would likely charge you more to make up for a proposed 25% tariff on China. Shifting to Vietnam could be one solution if factories like this one can find enough new workers, and if Vietnam's congested highways, rail lines, and ports can handle the extra traffic, issues the Chinese have been ironing out for 20 years.
We expect all of that to take time before Vietnam can be ready to absorb all demand that we're looking at the moment.
Of course, these are jobs that left the U.S. decades ago and that many wish would come back. It's not unthinkable, but a lot will depend on how the U.S. and China narrow their differences and how countries like Vietnam step up to get the goods you want onto shelves near you. For Nightly Business Report, Carl Quintanilla, Hanoi.
Coming up, will the second half be a healthy one for healthcare stocks?
The government today revealed a nationwide crackdown on illegal robocalls. The FTC says it recently blocked more than 1 billion illegal calls in coordination with the Justice Department, as well as with state and local law enforcement agencies. Together, they took more than 90 actions against those touting bogus services. According to the FTC, consumers get tens of billions of illegal robocalls every year.
And still some got through to me.
Yeah.
The healthcare sector was the best performing group last year, but that wasn't the case in the first half of 2019. And now investors want to know if the sector is ready to rebound. Bertha Coombs takes a look.
Regulatory pressure from Washington will continue to loom large for the healthcare sector, with the Trump administration now taking up transparency on hospital prices. In the next few months, analysts say watch for the administration to finalize its drug price blueprint policies, including a ban on pharmacy benefit rebates for Medicare drug plans and potentially pegging some Medicare drug prices to international rates. The policies proposed in the last year just after drug makers raised list prices.
If you assume that drug companies are going to raise list prices again the beginning of July of this year, then we can assume the administration is going to do what it did the last two times, which is issue additional regulations immediately thereafter.
Outrage over high drug prices hit pharmaceutical stocks hard during the last presidential election cycle in 2015. This time around, health insurers have been hit hard, following Senator Bernie Sanders' campaign launch in February and again in April after the senator reintroduced his Medicare for All bill, which was endorsed by presidential hopefuls Kamala Harris, Cory Booker, and others. Analysts at Nephron Research say stocks found their footing after Joe Biden entered the race. The frontrunner is not seen endorsing single-payer health care.
If you were to see one of the candidates, like Bernie, who believes in a Medicare for all and believes in really getting aggressive on drug pricing, take the lead, at that point, I think you would see negative impact on healthcare stocks going forward.
On the fundamental side, the major insurers have all forecasted stronger earnings in the second half, which also helped stabilize their stocks over the last month. But it may be tougher for them to move higher amid the regulatory and political pressure they'll face this election cycle. For Nightly Business Report, I'm Bertha Coombs.
And finally tonight, SpaceX's Falcon Heavy rocket blasted into orbit in the wee hours of the morning this morning. It carried 24 satellites for the Defense Department. SpaceX founder Elon Musk called this the most difficult launch ever. SpaceX reuses its rockets, including the two side boosters of the Falcon Heavy. And after this launch, those twin boosters landed upright and intact. But the rocket's center booster missed its target and landed in the sea. But the overall mission was completed just a few hours after it began, and it was considered a success and always spectacular to watch, too.
And so remarkable how far we've come since we first landed a man on the moon, right?
Exactly.
Well, before we go, let's take a final look at the day on Wall Street. The Dow fell 179 points to 26,548. The Nasdaq was down 120, off 1.5%, and the S&P 500 slid 27. That's Nightly Business Report for tonight. I'm Contessa Brewer. Thank you for watching.
I'm Bill Griffith. Have a great evening. See you tomorrow.